All right, so let me just show you the market thoughts that I posted before I open the room, which is right here. Healthy payrolls, push Fed rate cuts out for now. And yes, by the way, I still think the Fed cuts in March.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.laductrading.com/club.
All right, so this is what we got. U.S. economy adds 216,000 jobs above expectations, like by a nautical mile. Unemployment rate fell to 3.7% below expectations. Hello. So now this was it. From a tactical standpoint, SPX 4707 is support until it isn't. Otherwise, I really see 394 with SPY 465 and SPX 4655. So that's hitting right now pre-market and we're bouncing. I also posted this in Chase as soon as this payroll print came out. And then I wrote this up and obviously wanted to get this out because I think this is where we get some puts monetized, as I mentioned. But VIX 1449 daily close still matters a lot. And obviously, if we're down in this neck of the woods, 465 and 4655, we could still break it if we get some selling of size. And where would that selling come from? Well, we got CTAs down here. And I wanted to bring that up because the flows do matter. They really do matter. I'd say right now, the markets, the traders of short-term interest rate futures are reducing their bets on a Fed rate cut in March to back to 50%. Remember, it was 90%, that fell to 80, 65, now 50. So the stronger the economic data that comes out, the less likely the market believes the Fed will cut. I'm still raising my hand going, I think they're still gonna cut. But it's not because, but that doesn't matter. Doesn't matter. Right now, you can read about that up here, right? I posted that the other day. Why do I think that? Why? So I got lots of details. I don't want to do that and waste time this morning. Point is, CTAs are still very price insensitive, and they are loaded. Non-dealer U.S. equity futures positioning is extreme, right? Very fully bullish, fully saturated. Yes, they're going to unwind this, but I don't believe it's so easy to unwind this right before earnings season. And earnings season is starting it's already started, but I mean, the banks really kick it off on Friday. We're 1 week away. We got all kinds of stuff coming up. And we got CPI on Thursday. I'm not feeling it. I'm just not feeling we're going to get that big unwind. So I wanted to post this data because I think it really matters. We got some great levels to trade against. We've already hit all of my price targets from Tuesday. I think the macro is still very important as far as the levels, right? That the 10-year would move from 3.8% into 4.1, 4.2% before getting rejected. We've made the 4.1. That the dollar would bounce, off that 100 channel support into 104, 105. We've only made it to 103. And the US dollar JPY, dollar yen, would move into 145, 146 before getting rejected. So we have made it pretty much that 145. We definitely have made it into 103, and we've made it into 4.1. So I think we're going to have a bounce. That's it. I just don't think the selling is going to be outsized yet. So 4,600, I have talked about, right, on that chart, is another really strong level of support. And then I found a great write-up. Gamma Lab, I think, nailed it. So they talk about this negative gamma environment that I already, mentioned we're in, right? 4750 below, we're in this negative gamma. And that is basically it, where dealers are forced to delta hedge their portfolio by selling weakness and buying strength, which means directional moves become reflexive or get amplified. In a worst case scenario, a sudden drop could push the market to 4,600. Now, we did have that day, remember, on 1220. And I had literally just written on that Monday that we were a 2.5% volatility move away from erasing 2 weeks worth of gains. And we had a move that was very sharp in volatility, and then they came quickly back in and shorted VIX, but it was a very big intraday downdraft. That's the kind of thing that he's kind of writing about right here, right? So volatility could still get very busy, which is why I say that 1449 VIX is still your line in the sand. Below the market is bullish, above the market is bearish. That's in a nutshell. All right, so we can identify this put wall at 4,600, the large concentration of put open interest, which translates in ever larger gamma strike the closer we approach that level. Put walls often act as a trampoline. As dealers are sufficiently hedged, volatility calms down, strike level gamma decreases, and market actors start to buy back futures, which can often result in a forceful bounce. Now, Goldman was also out yesterday with some of their levels to watch. Same idea. Short term is that 4618, where we usually get a reflexive bounce. And then we get some lower levels they're putting into play, 4481 and 4420. Medium and long-term thresholds are more important for when the pendulum here really swings to big sales from this community. So that's why we got to be on alert. I'm just saying for today, I think we've hit the target. And I also think that's why 4,600 matters, because I already showed you this very long positioning, right? Well, this is dealer gamma. So the index gamma has already started to come off rather fast, right? This is Goldman Sachs, by the way. Long gamma will be removed from the downside strikes and rolled to topside strikes by next week, meaning the moves higher could be dampened. In other words, any bounce that we get, like yesterday, remember how I said, wouldn't be surprised if we have a bounce into 4625, overshoot potential of 4629. We got to 4627, and then it rolled right back over. So these are getting dampened, and then moves lower could be exacerbated. So on time frames, chase lower, I think we've hit our time frames, right? That 394 in the Qs, the 465 and SPY, all that good stuff. But bigger picture, after this bounce, we're going to go right into CPI, which should bring the dollar back down. If it's weak, it should help the dollar, by the way, fall, give some support to stocks, into earnings. I'm just not expecting a big shake and bake next week. I'm actually expecting a bounce. How's that? Summary, done.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.